Hello and welcome students who are taking Math for Business and Finance and Math Applications. This here is for Chapter 9, which is about payroll. Now this is going to be the theory portion of the chapter, and I don't know how many videos this is going to take. It can get to be a little bit complicated, but what I'm going to do is I'm going to kind of cover most of the major concepts in the theory. I'm not going to go into too many examples or applications. That is going to be left for doing the drill problems, the word problems, and the summary practice test. But I'm going to present the information, like I said, the major concepts, in hopefully a fashion that makes a lot more sense. And visually, you'll probably be able to pick it up a lot better. And it surprises me how many people don't know how to calculate their own paycheck. As a bookkeeper or as an accountant, over the 30 years that I've been doing it, it just simply amazes me that, everyone can figure out how much they're supposed to be paid. Like, for example, I get $10 an hour and I work 40 hours a week, so I should get $400. Yeah, that's their gross pay, but they don't know how much their net pay is. And so if they go to a new employer, whatever they get paid, they kind of just accept it as is. If there's some kind of a change due to a tax situation, a change in percentages or something like this, the change is made, but they don't really understand it and they just accept whatever they get for a net pay. So going through these videos on payroll will give you a real good solid foundation for understanding how much you actually do get paid and why you get paid the net pay that you do. Okay, so with that said, all right, my first slide here is why payroll and deductions. Okay, and as you can see, it says payroll is an expense to the business, and then why deductions. Right. This is the way you should be thinking about payroll. Here is a business, and this is you. And most people, they think the way they think about this is, oh, I need to work in order to be able to make money, so I'm going to go, find a job, and I'm going to get paid, X number of dollars, and that allows me to, live. And on the surface, that looks correct. I mean, that is true, but from a business's perspective, okay, from the business's perspective, what they're doing is they're hiring you to do a specific task, and they're agreeing with you as to how much and how you are going to be paid in order to perform that task. So this is an agreement between you and them, okay? It's not like they owe you the pay, okay? They only owe you the pay if you do the work, okay? You can quit anytime you want, right? So you have to think of yourself as an individual contractor, all right? I mean, that's kind of like what it amounts to. Everyone's afraid when they're working at a job, and they're afraid of losing their job, and they're afraid of what the business is going to do to them, and blah blah blah. Okay, but in reality is that the business is just paying you a certain amount of money that's agreed upon between the two of you in order to perform a specific task. Now, yeah, you think along the lines that, well, let's just take, I don't know, McDonald's and minimum wage, okay? They're saying that, and I don't even really know what the minimum wage is. I think, what, 7.25 or something at this time, all right? But let's just keep numbers easy and let's just say it's $7 an hour, okay? What they're doing is they're hiring somebody and they're saying, okay, for $7 an hour, For every hour that you work, you're going to be paid. We want you to do this specific task, and we will pay you that $7 an hour for that many hours. Now, you, that's up to you to either accept it or reject it. Okay. Um, if you decide to reject it, that's a negotiable amount. You can say, well, I really want 7.25 an hour, okay, to perform that same task. Now, here's the thing. If it's something like working in McDonald's, okay, where they can teach just about anybody how to do it, they're going to say, no, we're not going to hire you because you want too much money. We're only going to pay for $7 an hour, and there's plenty of people lined up behind you, and that will want that position. Okay. However, let's say you happen to be um, like a bookkeeper, and you're very, very good at what you do. Okay. And let's say the business wants to pay you, I'm just going to pick $9 an hour, okay, in order to do bookkeeping. Well, if you're very good at what you do, you don't have to go and say, oh, okay, I want that $9 an hour, I'll take the $9 an hour. I mean, you could, but you can say, hey, I'm worth $10 an hour, and here's why. And you list the reasons, and then you leave it into the business's court as to decide whether they want to pay that extra dollar an hour, okay, for a bookkeeper. And to be honest with you, it's well worth it to pay a good bookkeeper, a better wage. All right. Um, if all you're looking for, if the business is only looking for data entry, why pay $9 an hour? They should just pay the minimum wage, whatever that is, 7.25, to do data entry. But a bookkeeper who's good at what they do actually saves the business money, and so therefore, they can command a higher wage. So it's a negotiation between you and the business as to how much you get paid. I mean, and think about CEOs, new people who come in to run businesses, and the executives. When they're getting paid, they're always negotiating, right, as to how much they get paid. Right? It isn't a set amount, and between the business and the individual, they determine how they're to be paid and how much. Okay. So once that's set in place, um, and we're going to, in order to keep things simple, let's say that um, the amount is $400 a week. Okay, and I'm just 10 hours, I mean $10 an hour at 40 hours, or it could be salary or whatever have you. But the agreement between the business and the individual is that he's going to get $400 a week, to perform that specific task. All right. From the business's perspective, as far as they're concerned, that is an expense. It is a payroll expense. And as far as they're concerned, that is all they should have to pay. In other words, if they make, let's say they make $10,000 in revenue in sales, okay, and let's say they have, I don't know, 3,000 more in other expenses, and there's this $400 more for the payroll expense. Their bottom line is, let's see here, 3,400, which is $6,600 of profit, right? Because we're subtracting from the sales 3,000 in expenses. That takes us down to 7,000, less 400 gives us $6,600 in profit. Okay. As far as the business is concerned, that's just another expense, and that's all they really should be concerned with, because it's only a contract between you and them. If you're being contracted to pay, if the wage is $10 per hour, and you're working 40 hours a week, which means $400, Well, if you've done the work for 40 hours and they're paying you $10 an hour, what they should do is they should just hand you cash for the $400 or write you the check for $400, and that's your take-home pay. All right. From a business's perspective, that's the way it should run. Okay. However, we have something else that's involved, and that something else is called the government. Government. And we all know that is the IRS. Okay. Now here's the thing. The government's going to tax you. Okay. And they don't, as far as the government is concerned, you know, they're looking to get their money out of you, the individual, right? That's why you have federal withholding tax and state withholding tax and whatever. But the government doesn't want to run around and chase, 150 million employees. Okay. It makes more sense for them to have the business withhold all of those amounts because there's might only be, say, 3 million businesses. Okay. So it's easier for the government to go and look at the 3 million businesses than it is to be messing around with the 150 million people. I mean, that, the vast majority of people who get paid the $400, if they were given that cash on Friday afternoon, out of that $400, they'd start spending it and they wouldn't put aside any money for taxes. They wouldn't do it. Okay. So the government would always be chasing around these people, these 150 million people, looking to get their taxes. Well, it's a lot easier for the government to say, Mr. Business, what we want you to do, let me erase this. What we want you to do is we want you to, let me erase all of this. What we want you to do is instead of paying the employees the $400, what we want you to do is we want you to pay them the $400, but withhold taxes from them. And let's just say that happens to be $100 in taxes. Okay. So they're going to hold back the $100, and the business is going to hold back the $100, and they're only going to give you the $300 in your paycheck. That's called your net pay. Right? So your $400 becomes now your gross pay. Your taxes or any other types of or anything else that's withheld are called deductions. And then you're given your net pay. Right? So the $100 that the business is now holding, right? They're responsible to pay that to the government. If they do it on time, they get a little kickback. They get a little bit of a discount in order to offset the costs for them doing that. If they don't pay that, then they fall into penalties. Okay. And interest and penalties that are pile up very, very quickly and become very huge because the government wants that money. And so you're left with your net pay. Now, every, however often you get paid, whether that's weekly, bi-weekly, monthly, whatever it is, okay, you're always having these withholdings taken out of your paycheck. Well, at the end of the year, and remember the calendar, and it goes by calendar year, January 1st to December 31st, right? You're getting paid that entire year. And then, of course, we all know that on April 15th is tax day, where you have to, do your, submit your tax forms. Basically, what that is it is a reconciliation, okay, as to what should and what should and shouldn't be paid. And going into that tax aspect is for a whole nother course. Okay, these videos on payroll is not about doing your taxes. but just realize that during the course of the year, there's a, it's oftentimes not very accurate. It's close, and you'll see as I go through explaining the deductions in one of the other videos, what I mean by that. Your taxes are close, but we file our taxes every year in order to reconcile the account and or reconcile your individual account, okay? In order to make sure that um, you haven't underpaid what you're supposed to pay, okay? And so that's why you do your taxes at the end of the year. And so that's kind of like the thinking behind why we do payroll and why we have deductions. So if you have any questions on that, feel free to call and speak with an instructor, or go ahead and rewatch this video. But um, that's the gist of it. And as we move into the next video, we're going to actually start talking about, here where how do we calculate your gross pay, and then how do we do, what calculate your deductions to end up with your net pay. And then we're also going to talk about uh, how if you think that you get paid $400 because you work for 10 hours at $40 an hour and you think your gross pay is $400, well, you're actually wrong. You actually get paid more than that. Okay, and I'll show you why that is in one of the later videos. Okay, so with that, I'll see you in the next video.